Hello and welcome to the latest trades and tutorials video. This is Jeff Bish, president of MarketGauge.com. And in this video, I'm going to take a look at how you can use big Fed announcement days to help predict which way the market's going to go next. And we've got a perfect example of that because last Friday, just 2 days ago, Janet Yellen kind of threw the markets for a loop with a couple of comments in Jackson Hole, created a really nice, what I would say, call a Fed day. And using that Fed day, we can determine which way the markets might move next and which sectors we should be in, long side, short side. The video I did just a couple weeks ago about how to find good trades on down days was a big hit. So this is much like that. So I think you're going to like it. But before I get started, if you're just finding us on YouTube, please subscribe to our channel. If you're just finding us on Facebook, please like us, and also know that you can get more videos and information like this if you go to marketgauge.com/tutorials. And finally, we've also put out lots of information on Twitter at MarketGauge and at Market Minute. And double finally, make sure you're watching this in HD. The settings are in the lower right-hand corner. Okay, so on this page, we're looking at what we call the 4 market watch charts. SPYs in the upper left, Qs in the upper right, diamonds in the lower left, and IWMs in the lower right. Now, they all have the same pattern, so I really only need to look at one to demonstrate this to you to get started. So I'm just going to pick the SPYs because it's probably the most popular to watch. Now, here's what you want to look out for. When you have a volatile day in the Fed, where the Fed makes an announcement, whether it's a press release or whether it's just minutes that are really anticipated, or in this case, last Friday, Janet Yellen just speaking at a much anticipated conference, the Jackson Hole conference. And the day that she did that, the markets, this is a daily chart, had a really wild range. Now, even if the market doesn't have a really wild range, you will find if you watch the action of the markets that very often it's not the Fed day itself that helps you figure out which way the market's going to react to the current Fed atmosphere, but instead the day after. However, it's not necessarily the day after, it's the day when the markets clearly take out the range of the Fed day. Now, if you follow this, you won't get sucked into those situations where the Fed drives the market up one day only to find the next day in the morning that for some reason the majority of market participants have now changed their mind and they're all going negative, and the market does a huge head fake, fakes everybody out, when really it wasn't that it was a huge head fake, it was a knee-jerk reaction, and knee-jerk reactions are often the wrong ones. So that's it, pretty simple, right? Just put a line around or put a line at the range, and when the market breaks that and continues higher or lower, then that's a direction you should anticipate a significant move to be. Now, significant could be several days, could be several weeks, but it's an indication of really significant levels to watch and inflection points that could lead to either the continuation of a trend or the reversal of a trend. Now, it needs to break by just more than a few ticks. It would be better if it closed through it and then continued even the following day. So there's multiple ways to look for confirmation on that, but that's a topic for a different video. Now, if we look at all 4 of these charts, we can see that they're all still coiled in that range. So for right now, especially last week in August, I'd really sit tight and see which way this market is going to go, and perhaps focus on some of the charts that are breaking. And we have quite a few that are breaking. So let's actually take a look at Mish's modern family. So if you're not already receiving Mish's Market Daily, or Mish's Daily, our daily newsletter that comes out, in which Mish tracks the market, anticipates which way it's going to go using several ETFs and some great commentary, you really should get it. All you have to do is go to marketgauge.com/daily, and you'll be able to get right in. You can also see it on our site. And just quickly, I am looking at the modern family, which includes the retail ETF, the biotech ETF, the Russell 2000 ETF, the semiconductors ETF, the transportation ETF, and a financial ETF. Now, the general idea here is that you want to see all these things in agreement, and when they are in agreement, or the majority of them are in agreement, that's a strong market. Now, there are lots of nuances, and that's why Mish guides you through it each day. But I want to just look at this with respect to what we just talked about with the FedDay. So first of all, it would be natural to take a look at the financials because they are doing exactly what I just suggested, which is the Fed day is right here, Friday. Yesterday they broke out to the upside, and now today they're continuing higher. So this trend is really intact. Now this is the KREs. If we look at the XLFs, the big banks, doing the same thing, right? Now you may remember from a couple videos ago, I took a look at the XLFs versus the XLUs, and in case you're wondering, down here, this is our real momentum indicator, and this measures momentum that you can't necessarily see in the chart. And what I would like to point out is, according to this real momentum, the momentum here is breaking out well above the levels of momentum that we saw in here. Now, another early warning sign that I had when I talked about XLU versus XLF was that the blue line in the momentum crossed its green line long before it did in price. And so these are some signals that we get from this type of indicator. And I happen to be doing Mish's Daily today, and this week, and I'm going to go through the modern family with this real momentum indicator. So you'll be able to see it both in terms of the Fed day and the real momentum indicator. So let me just give you a quick look at XLU, just for those of you who have been following this blog tutorial, and you can see that XLU, the Fed day is right here. It's breaking down today, and not surprising because you can see that the momentum, the dots, has already broken the green line, where the XLU is not even close to its green line. So the momentum is really running ahead on the downside of XLU. Also, I'll point out, for those of you who watched or got Mish's Daily yesterday and watched my my comments or read my comments about how to use the 10-day moving average, notice how that once this crossed under the 10-day, the rules I gave you in Mish's Daily are still intact. So everything in this market is really going in, I would say, a really logical way. XLU's falling apart, momentum is falling in the direction of the market, and the financials are picking up. So let's take a look at one other interesting one, and I'll cover the rest in the daily. So XRT breaking that Fed day today. So this is exactly the kind of action you want to watch out for to determine which way these sectors are likely to continue to go. Right, so it's a really simple rule, especially if you combine it with some simple but powerful indicators. You can really get a great sense of what the overall market's going to do and what the important sectors are going to do. And yes, it even can work on stocks. So hope that helps. And again, if you're not already getting Mish's Daily, I really encourage you to go to marketgauge.com/daily and get it. It's free, and you'll get more great information just like this every day.